I wanted to talk briefly about counting legs, second entries, first entries. It's one of the key parts to our strategy. First thing that we have to do is realize why it's important that we enter on second entries. The reason why is because most of the time institutions will wait until the second attempt to do something in order to enter. They want to see what the first attempt is like. They want to see where it happens. And they want to try to find a place to try to do that again, but this time it's going to be backed by big institutional traders. So whenever we go to count legs, how do we know when a leg begins or ends? Well, anytime a bar goes above the previous bar's high or low, it means something. In the case of a bull channel here, we have our first entry, for the bulls, because this bull bar went above the high of the previous bar. Up here, we have first entry for the bears. Why? Because this bar, even though it's a bull bar, went below the previous bar's low. And we can count like this over and over, forever and ever and ever, and it would never ever end. If we kept counting, we would have first entry long. Why is this a first entry long? Because this bull bar went above the high of the previous bar. I'll change this to a 2. Now as we get up here, what do we have? Second entry short. First entry long, second entry short. First entry short, I'm sorry. First entry short. 1, 2, 1, 2, and we can count like this over and over. Now what we need to do is we need to look for entries at key entry points. Now, I already have this channel drawn out here. Let's only look for bear entries because this channel is bearish. Second entry short at the key entry point. Why is this a second entry? Well, it was a pullback because this tail went above the high of the previous bar here. And it was a second entry because this candle broke the low of this bar's low. It was both a pullback and a second entry in the exact same bar. As we push down, we have another bull bar causing a pullback, and the very next bar is our first entry short. Anytime we have a push up above a previous bar, it becomes a pullback. Anytime we have a push below, we have a second entry short. Let's keep counting here. Pullback, first entry, pullback, second entry. Let's talk about counting legs in a channel now. It's a little bit different. We're looking for a second entry at a key entry point. Current key entry point is going to be this channel line. So let's look for a second entry around this key entry point. Here's a first entry where this bull bar goes above the high previous bar. We can say 1, first entry. This bar right here is a bear bar. Anytime you're looking back at price and you don't get to see some of these bars happen live, a lot of times if the bar is bearish, then the bullish price action happened first. In other words, this candle wick right here likely formed first, and this likely formed last. It's not always true. You kind of have to watch it in the market live to truly know. But if we're just looking back on past price, it's usually a pretty good indication. So first entry long, pull back. Second entry long, triggers here. When there's a bull bar, breaks above, triggers right here, where this bull bar breaks the high of the previous bar. This creates our second entry. Now, anytime that we stay inside the channel, nothing is going to change in terms of how we count. However, once we break outside of the channel, things get a little bit different. As an example here, this bull bar pushed above the previous bar's high. This is the first entry long. Once we break this channel, and there's at least one bar that holds below the low or above the high and a bear of the channel, then our count is going to restart. In other words, this is a first entry, and if we come over here to the next time where a bar breaks above the previous bar's high, this is also a first entry. First entry, first entry. This is a trade that I took the other day, and it's something very interesting that happened here, and I felt like it would be perfect to talk about in this video. Sometimes when you're looking to channel fade like this, and we are sitting here and we're looking at the price, and we notice bars like this, and I kind of briefly talked about them before. This bar right here ended bullishly, which means that it likely pushed down first before it pushed up first. And watching this live, I know that that's what happened. Now, what is this right here? Well, this is right here is an entry short as well as, or an entry long as well as a pullback. So, first entry long here when this bull bar breaks above the previous bar's high. And that does not happen again until here when we have a break of the low and then a new high. This creates our second entry. It's called a nested entry. A nested entry is when both the pullback and the entry itself trigger on the exact same bar. It's something that you'll see often enough, but it's not something that happens super commonly. It's good to know about though, because it can be tough to take this trade if you don't really know how to count legs super well. It can be kind of difficult. So be on the lookout for that. Remember, anything within the channel, 1, 2, 1, 2. But as soon as this channel breaks, our count is going to restart. So be aware of that anytime you see a channel break. Let's talk now about ranges and how we count legs and ranges. Now we can count legs in the range. We can say that this is an entry. We could say that this is an entry. We could say that this is a pullback here. And that's fine. But what we're most interested in is the legs that happen outside of the range. There's almost always some form of volatility within a range. Even up here, you can see where bars began to close outside the range, but went back into them. This isn't uncommon. Wicks under ranges, it's not uncommon at all. It's healthy for a range to see that. So when we're looking to count legs, and we find ourselves in a range, the legs that we're most interested in are happening outside of the range. And that's these legs right in here. We have a bullish context, meaning that this channel line was bullish, had a strong move up. Now we begin to range. What's happening here? Well, the institutions that are trying to take the market higher have run out of traders to take the other side of their trade. So what do? Well, we end up in a range. A range is simply just a point of agreement within the market. Institutions do not have any more shares that they can buy. Nobody's interested in shorting this though because of the strong move up, which means that you get a lot of scalping, a lot of profit taking, and very minimal profits. People who are looking to take a trade in here generally don't get very much. There is a way that we can maximize our trade potential though. If we were an institution and we wanted to take the market higher and we run out of traders to take the other side of our trade, what do you think would be a good way to entice other traders to go short when we want to go long? Well, a nice bearish break of a range. Now, the range could still break above, kind of like this. These aren't signals that we're looking for. We're not looking to trade this breakout. This isn't a good trade. This doesn't leave us with a positive traders ratio, taking anything up here. However, we can assume that because of the bullish context, any sort of bear movement outside the range will likely fail. And that's exactly what happened here. We have our first push up above the previous bar right here, creating our first entry long. Another push down, creating an entry short. And another push up above the high, the previous bar, creating our second entry. So we talked a little bit before about channels and ranges and how we count legs. And we count 1, 2, 1, 2 over and over again while inside the channel or the range. But once there's a break of that channel or of the range, we restart our count and we begin to look for new entries again. There's one other point in time where we do this, we restart our count, and that's whenever the market is making a new high. And a lot of people get this confused where they are taking first entries that they think are second entries. I'm going to dispel a little bit of that confusion. Anytime we look for a second entry, the first thing we want to look for is a spike. And you see our spike here, boom. Now, we have a pullback. We have our first entry long. First entry long here. We have a pullback. We have a second entry long triggering on this bar. Why do these entries trigger? Because the current bar, this bull bar, went above the previous bar's high, both cases. This creates our entry long. So we're going to continue to count like this over and over again, but we're going to reach some areas where we're going to have to restart our count. And before I show you how we restart our count, let me first show you the general shape that we're looking for. When we have a two-legged pullback, we want to see this. Push up, small pullback, small attempt up, another pullback, and an entry to an equal or new high. This is our first entry here. This is our second entry here. We can do that bullish or bearish. For the bears, it looks something like this. Initial spike, first pullback, first attempt down, second attempt down, looking to enter at a key entry point, looking for an equal or new low. What we're not looking for is something that looks like this, where we have a spike up. Move this out of the way some. We have a spike up, we have a pullback, and we reach an equal or new high. This is going to cause our count to restart. In other words, this is a first entry, and whenever the market pulls back again and begins to push up again, no matter what that entry looks like, this is once again going to be first entry, unless we get something like this, another push down and then another entry long. Let's look at that one more time here. This is what we're looking for. Second entry, initial spike, first pullback, second pullback, looking for an entry to go long. Short, same thing, spike, pullback, first entry, pullback, second entry, looking to go short for an equal or new low. This is what we're not looking for. Initial spike, one pullback, and a push up. So what does that mean? Well, that means that in situations like this, we have a previous high, which we'll mark with this horizontal line. We'll mark it here as this previous high. And then we have this big bull spike here. Let's count entries real quick. We have a new high. This is our spike. We have a pullback and a first entry long. First entry, another pullback, second entry long. We can only have our entries once we have a pullback first. This is our first pullback. First entry goes above the high of the previous bar, pullback. Second entry goes above the high of the previous bar. If we draw this out, this looks like this. And then, of course, an attempt up. Now, does this pattern that I just drew, does that look like this? Say, of course it does. Two legs, first pullback, second pullback, entering on the second entry. Okay, we want to mark this high and keep it in mind. Let's just continue to count legs. We have our second entry here, and we never have a pullback until this bar here. This begins our pullback. So here we have a first entry long, pullback, second entry long, and we're going to break into a new high. Then what do we have? We have a pullback here. We have a first entry long, and then after this, note that we make a new high. Well, if we make a new high, what does that mean? Well, it means that if we go on a little bit further here, we have a pullback on this bar, we have an inside bar, and this very next bar, this bear bar, broke above the previous bar's high. My question to you, is this a first entry or a second entry? The answer, well, it's a first entry. Still a first entry long. Why is this a first entry and not a second entry? Because it continuously makes a new high. Push up, pull back. We're at a high, first entry. We made an equal high, pull back, first entry. We made a new high. We're going to pull back. First entry again, new high, pull back, first entry. See if we made a new high here or not. Looks like a new high. Pull back. First entry. These are all first entries. We need a second leg down in order for this to qualify. We have to have something that pushes down, something that has an equal high, like these two bars here. Our count restarts. Something that has a new high here, here, here. Our count restarts. If we want a second entry, it has to be like this here. So be aware of that in a trend. If you find yourself having trouble to find second entries in a trend, then instead look for trap entries and try to catch the bears trapped in a trade. Tends to be a really, really nice thing to do.